Aloha and welcome to Java. Thank you kindly for joining me. It's September 26, 2024. It is Thursday. Now I'm back with regular equipment, more stable connection. So hopefully the quality is improved. Thank you kindly for staying with me. Did make it away from that hurricane. So I would like to start off with a couple of things this morning. The first is to thank everybody that came into the Discord discussion yesterday. I always learn a tremendous amount, absolutely brilliant group. And I thank you all for that, Phil. I'm so sorry the time doesn't work for you. If there's few of you that would like to join, but that time does not work for you, please leave in the comments what time would or date would work for you. We might open up an additional one. So with that being said, we also have another this evening, same time, 5 o'clock Eastern Daylight Time, and will be hosted by Axiom. Now, Axiom is doing basically on cryptocurrencies, blockchain, and then also getting into Web3 forward. So if you have anything that you would like to speak about in that regards, please feel free to join. Same server. So with that, let's get into what is going on in these crazy markets these days. Now, starting with the MMRI and the risk fear greed meter, the risk indicators are increasing. And what is happening, as I was saying yesterday, many more retailers pouring into this market, using it as a casino now, since basically the market is now backstopped fully by the Federal Reserve as well as the government. So fear greed meter is at 67 right now. The danger signals start happening, I would expect, around 70 or so when we start getting into the extreme greed at 75. Doesn't mean that it can't go higher. It just means that that is a highly volatile area. Now, I don't think it's going to hit that far before we see a bit of correction. And again, nowadays, we don't really get corrections. So we keep our eyes on the 10-year yield as well as the relative strength of the dollar. Now, the relative strength of the dollar has been pulling back quite a bit. Yesterday it did strengthen, as well as the 10-year yield, put a little pressure on the markets. What happened with that was not any action by the United States, but rather this was China. So it had China and then also Hong Kong, their stimulus basically bolstering everything on that side, created distortion where with their weakness, the United States flow basically had a low volume in the U.S. stock markets, as well as a drop in the prices. So basically money started flowing into Chinese stocks, and we've been watching that dynamic happen. So we've got a Goldman strategist saying that the United States election will test the optimism in the stocks. I think it's going to be a little bit more global. I agree with that. I think there will be increasing volatility, but right now is completely backstopped at least until election time in November. That does not mean it cannot get weak or pull back a slight bit as it did yesterday on that weak volume. So with this, I'd like to speak about all assets rising, basically gold. We've got cryptocurrency above 64,000 for Bitcoin right now. So we can continue to see this basically as more of a sign of inflation than an increase of value of these assets. And that difference is the difference in the thought patterns that you will survive this. If you understand this is massive inflation beginning to come into play, you'll be a step ahead of the game. So down here, we've got investors finally experiencing the quote unquote everything bull market, and it may last. Well, that's all because of the weakening of the US dollar is showing that everything priced in dollars becomes more expensive. That includes stocks, gold, real estate. We'll watch housing increase as well. So with this, we've got current stock market looking a bit weak, but futures again showing green on a recovery today. We'll watch the volume again. So with the calendar, we've got prior to market open, they're going to be looking at jobless claims. Again, we've got the GDP basically coming out, the revision, and durable goods. I think it's time to start watching some of these durable goods and the shipping a little more closely because they will show us these distortions between with the trade between other countries, which are now having more of an effect on the stock market. Again, we've got Fed governors coming out to speak so that they can manage the market if it goes in a particular direction that they don't like. The pending home sales coming out. And then I've put up Friday because most of these are prior to the market open that are actually going to have an effect. So if you are longer term trader, swing trading, keep an eye on these for tomorrow in your opens. We've got the PCE, some more inflations, and then, as I was saying, the trade balance. So this will open up a little bit more of a window into what in reality is going on with not just our economy in the United States, but globally. So with this, I would like to speak about a couple of individuals. First off, Micron. Now, they blasted through yesterday, and they've got strong guidance, even though their earnings basically were down and their stock shot basically through the roof. Now, this is all of the semiconductors, chips, and still showing basically looking forward that artificial intelligence is going to come back into vogue, so to speak. Now, with this is not across the board. We've got, if you look over Southwest, this is a perfect example of more things that we are going to be seeing as far as businesses. And once they get weak and cannot handle the inflation that is coming forward, we'll watch them either go out of business, sell out, or get subsidized. So we haven't hit the point of major subsidy yet by the government, but that will be coming down the road. Now, Southwest Airlines announcing staff and route cuts amid their mounting losses. Now, short haul has increased cost as a carrier, and a lot of this is on fuel costs. So Southwest, and this is basically because it takes a lot more for a short trip than it does for an extended one. So they're feeling the pain first. And what I'd like to show is a dichotomy here. Now, they're firing people, which is going to increase unemployment, decrease demand, and add to the weakness in the overall economy. However, their stock jumping on this because a revenue outlook is increased and now they've got a buyback plan. So these corporations are going into survival mode on the underneath, but what we're watching is their stocks are soaring. So a couple of other things. PayPal expanding cryptocurrency offerings for United States business accounts. I think they're one to watch because basically, and it's not financial advice, but they are looking forward as far as a couple of space. Number one, the cryptocurrency. Number two, largely the payment plans, and they are on the same rails of what is moving forward with the CBDC. So they will be what looks to be one of the survivors of this coming forward. So now with this, we've got finding a job now is harder than any time since pandemic. And they're asking if this is a bad omen for the economy. The economy is in the waste bin. Basically, no production, businesses closing, only the larger ones are growing, only ones with government subsidies. So with this, we've got in the other side of what happened, some of this distortion. China, they have Politburo. They basically boosted, had a lot of stimulus. They're pouring quantitative easing of their version into their housing, as well as their economy stocks and elsewhere. So they are government backstopped as well in a direct battle with the United States doing the same thing. So with this, we've got global trade saying, this is from Bloomberg, saying that it's dimming as the chips boom is declining. Now, on their decline in demand, this will flow out through many other, it's just an indicator. Now, they're not affecting a large number of things at the moment, but it's a huge indicator. So behind the works, monetarily, we've got Congress. Again, they're talking about the shutdown, government shutdown in the United States. So they have approved 3-month budget to push this forward, avoiding a shutdown in October. Now, October is just prior to election cycle again. Now, we've got funding for most federal programs, what they're talking about, that were supposed to expire after September 30th. Now, if they can afford to shut down these programs, are they necessary? So first off, that's the question. Secondly, do you think they're going to shut these down when this is the group that votes on their own raises? Now, with this, they get to vote on their own shutdown, whether they approve these spending bills, and they vote in their own raises. Now, with this, we've got the army in the United States military. Now, this is just an example story that they're getting their bonus pay delayed by deployed soldiers that are out in the fields doing the work. We've got the Congress people and basically just your government back home taking vacations, agreeing that right before their vacation they're just going to approve this spending bill, and is such a distortion that I'll just leave it at that. So with this, we've also got, and this is a major deal for the housing, which trickles out to the rest of the economy. So Housing and Urban Development, or HUD, in the United States Secretary is speaking on how the government has to be part of the solution for the United States housing crisis. Now, she is the DEI pick, and I'm allowed to say that because I'm not a white male. If you are a white male, you have to be careful because it's not okay. So, anyway, we've got Miss DEI pick here for the housing sector, the United States, saying U.S. government should step in and fix this. Now, the other part of this story, we've got gangsters that have taken a firm grip in the United States. This is the group right here that I cannot say here. They'll pull this video. Planning to seize and control communities. Now, we've got, this is coming from someone who controls that area. I have someone I would like to speak with on this openly. However, he's, of course, not allowed. So we've got a lot of things that are going on in the background here. There is a large plan to control this through one of the largest sectors, which is housing. I will speak about this a little bit more and kind of test the waters as far as what will be allowed on this platform. So with this moving forward, we've got what they're calling holiday economy. Now, this is courtesy of one of the financial people that get here. I will recommend him later. But anyway, we've got the buy now, pay later again in the news. Basically, their growth is amazing. They're another form of a loan, short-term loans that rope people in. Now, traditional United States lenders are talking about fewer people paying off these short-term loans than even last year. This, to me, is major sign of downturn in the economy. The shipping and deliveries will follow this as everyone is purchasing on credit. And now to the largest providers, we're allowing payments with credit cards, which is a different form of debt, higher interest rates. Americans getting deep into debt over these two methods. And now they're not allowing the use of credit cards to pay this off any longer. So I think this will show basically the truth. Probably 60 to 90 days, again, right around after the election cycle. We'll see if they allow this one to drop. So last couple of things that I would like to say with this. We've got Russia made major change to their nuclear doctrine. Now, what is the nuclear doctrine? It is basically their own self-imposed rules as to how they're going to handle this issue with a nuclear response. So basically, what they have added, one of the major things, is it used to be kind of limited to NATO. Now their language includes a non-nuclear state. So while they don't name them directly, we know who this includes. So basically, if anyone were to strike through a non-nuclear state, non-NATO state, and target, basically, this is for the deep strikes or internal long-range missile use on Belarus or through their internals, could include an atomic response. They're also lowering the nuclear threshold that they're accepting, and they did expand that area to now protect Belarus as well. So that is a major change that they have done. This is actually Erdogan, and he is head of Turkey, and Turkey is serving as the bridge, and he is basically approving of this. they are the bridge staying between Russia and the Western nations. And he is basically kind of warning the Western nations not to kind of threaten us, if you will. Now, with this, I just want to keep in mind we've got this basically this market where global stocks are rising. Our greatest threat is not nuclear, it is the debt coming. Now we've got Hong Kong exports also slowing. We've got Italian manufacturing dropping. We've got Germany with their consumer morale. They're saying it's improving. Their manufacturing's also dropping. We've got oil dropping a bit, and the Eurozone is basically hurting as well as far as their production. So with all of these things, we're going to watch that major amount of debt coming forward. Today, I wish you a great trading day. We are looking at continuance. And until I see you again, my friends, stay free.